Welcome to ACCA paper P7, Advanced Audit and Assurance. Firstly, let's consider the F8 syllabus, the one that hopefully you've already passed. To what extent is knowledge of the F8 syllabus going to help you on P7? And the answer is it will help you a little bit. The basics of how to carry out an external audit of a company's financial statements are exactly the same on P7 as they were on F8. So to a great extent, there is no new audit theory to actually learn. So on F8, you considered things like ethics. Should my firm actually be doing this audit in the first place? Or are there ethical issues that mean someone else should do it? And that's on this syllabus too. You considered audit planning. You looked at materiality, analytical procedures, and you looked at audit risk, identifying those areas of the financial statements most likely to have errors. And yes, all of that is on this exam too. You looked at internal control systems and assessing them, and that's on this exam, although not quite as much as F8. And you looked at substantive testing, testing the actual numbers and disclosures in a set of financial statements directly by looking for supporting evidence. And that is very much on this syllabus. You then did some completion work, things like assessing going concern, subsequent events, and all of that's on the syllabus too. And then you signed an audit report. And guess what? That's on the syllabus too. Now you might therefore ask the question, if all of the F8 stuff is also on this syllabus, what's different? The answer is that while the theory and the methodology is the same, the set of financial statements that you are auditing will be more complicated here. The main difference between P7 and F8 is that whilst you're still carrying out an audit of a company's financial statements, here the accounting standards that are coming up will be more complicated. So I suppose the first big tip, the first big piece of advice for this exam is don't focus too much on the word audit. Instead, make sure your financial reporting knowledge is up to scratch. Now that, of course, raises the question, which accounting standards do I need to know? Well, if you look at where P7 comes in the series of exams, it's the very last one. So obviously, this exam is harder than everything else. Well, no, not really. But it does mean, of course, that this exam comes after not just F7 financial reporting, but also P2, the more advanced financial reporting paper, corporate reporting. Which means, I'm afraid, in theory at least, any accounting standard, either on the F7 syllabus or on the P2 syllabus, could come up on this exam. And if you don't know the accounting issues, how can you tell me what might be wrong in that set of accounts, the audit risks? How can you tell me the audit work you do if you don't know what the problems are? And how can you tell me an audit report if you can't spot what's wrong in a set of accounts? So I'm afraid your accounting knowledge is pretty fundamental. Just as a police officer cannot enforce the law if they don't know the laws, likewise an auditor can't check a set of accounts if you don't know the accounting rules. It's critical, and it's one of the main reasons that people who fail this paper fail it. Not a lack of auditing skills, a lack of accounting knowledge. The good news, if there is any good news here, is that the accounting standards that historically have come up on this exam have tended to be accounting standards that you're probably fairly comfortable with. So whilst things like deferred tax, maybe even pensions, foreign exchange, financial instruments could all come up, the ones that the examiners of this paper have tended to prefer are things like intangible assets, impairment, provisions and contingencies, post-balance sheet events, or as we should probably now call them, events after the reporting period. And all of those standards are actually F7 standards rather than P2. So do be warned, any accounting standard pretty much could come up. But in reality, the harder ones from an accounting perspective don't come up that often. Okay, so there's the first thing we've considered. The fact that this exam is still auditing, but it's harder accounting areas that you need to audit. But notice that the title of the paper is not Advanced Auditing, it's Advanced Auditing and Assurance. So let's now consider the other stuff on this paper. Assurance services, what are they? Well, an assurance service is, strangely enough, any service where assurance is created. But you've probably worked that bit out already. What is assurance? Well, if you walk out of your house in the morning and your mother, father, husband, wife says, "You look good today," they're giving you assurance. They are assuring you that the way you look is good. Assurance is the provision of an opinion. It is giving an opinion on something else. Now, of course, one type of assurance is the external audit, as the external auditor gives an opinion on the truth and fairness of a company's financial statements. But unlike the F8 paper, where virtually the entire syllabus is about that external audit process, one other difference for P7 is that here we look at other types of assurance in a lot more detail. What types of assurance will we look at? Well, the first one on the list, I suppose, is something that is on F8 as well. It is internal audit. This is where a team of qualified people, internal auditors, go into a company, but instead of looking at their published accounts and checking the accuracy of those, they instead look at the company's internal systems, risk management, and internal controls, and advise the company on how well those are working. So apart from internal audit, which you have studied a bit on F8, what other assurance services might come up on this exam? Well, as you may well be aware, if we look at what happens in a company's annual report, we don't just get published financial figures anymore, do we? As you may have seen on P2, in a company's annual report, we've got the financial statements, of course. But on top of that, these days, companies are providing a lot of other information as well. Things like social and environmental data, pollution data, the percentage of their rubbish that they recycle, donations to charity, how they treat their employees and things like that. This corporate social responsibility stuff, if they're going to disclose it, potentially creates a problem. Because people reading the annual report think they can trust the financial figures because they've been audited, but what about all this non-financial stuff? So some companies are now employing firms of accountants, often specialist departments within firms of accountants, to check out this social and environmental data and give opinions on its accuracy. Again, a sort of audit.